Ladies and gentlemen, good day and welcome to Techno Electric and Engineering Company Limited Q2 FY2024 earnings conference call hosted by Asian Market Securities Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectations, projections, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Suraj Sonalkar from Asian Market Securities Limited. Thank you and over to you, sir.
Thanks, Rico. Good afternoon, everyone. On behalf of Asian Market Securities, we welcome you all to Q2 FY24 earnings conference call of Techno Electric and Engineering Company Limited. We have with us today Mr. P.P. Gupta ji, Chairman and Managing Director, and Mr. Ankit Saraiya, Director representing the company. I now request Mr. Ankit to take us through the overview of the quarterly results, and then we shall begin with the Q&A session. Over to Ankit, sir.
Thank you, Suraj, and good afternoon, and I welcome everyone to discuss Techno's financial result for the quarter ended 30th September 2023. Anything said on this call which reflects our outlook for the future or that could be construed as a forward-looking statement must be reviewed in conjunction with the risks that the industry and company faces. So now let me quickly highlight our performance for second quarter FY24. It is to bring to your knowledge that we have sold the wind assets of Tamil Nadu in FY23. With regards to this, the operations for the same has been disclosed as discontinued operations in the results as per accounting standards. Techno has created a subsidiary to promote business of data center. The company is not operating and not revenue accretive. In the consolidated results, we knock off the financials of this SPV of data center as per the accounting standards. That is the major difference in the standalone and consolidated results. As and when this asset becomes revenue accretive to the business, it will start showing its contribution in the results, and hence it would be good to analyze them. Total revenues for the company from EPC stands at rupees 482 crores, including the execution of data center subsidiary order at cost, up by 167% year-on-year. We expect the similar level of revenue for the forthcoming quarters as well. EBITDA for the company stands at rupees 75.62 crores, up by 133% year-on-year. EBIT for the EPC segment for the quarter stood at rupees 72.37 crores, up by 161% year-on-year. Other income for Q2 FY24 stood at rupees 28.30 crores compared to rupees 19.03 crores last year. PBT from continued operations for the quarter is rupees 98.08 crores, up by 103% year-on-year. PAT from continued operations for the quarter is rupees 71.42 crores, up by 98% year-on-year. EPS for quarter 2 FY24 stood at rupees 6.63. Now coming to half-year results, revenue from EPC in H1 FY24 stands at rupees 825 crores, up by 152% year-on-year. EBITDA for the company stood at rupees 123 crores, up by 125% year-on-year. EBIT for the EPC segment for H1 FY24 was around rupees 117.67 crores, up by 129% year-on-year. Other income for H1 FY24 was rupees 58.94 crores compared to rupees 33.77 crores. PBT for the half year was at rupees 170 crores, up by 106%. Profit after tax from continued operations stood at rupees 125 crores compared to rupees 60.54 crores, up by 107%. EPS for H1 FY24 stands at rupees 11.64. Current investment value, including cash and cash equivalent, as on 30th September 2023 stands around rupees 1,500 crores, that is more than rupees 140 per share. For H1 FY24, we had an order intake of rupees 611 crores. Post-September, we got 2 L1 orders converted, that is 1 smart meter order from Indore for 5 lakh smart meters for rupees 536 crores and 1 transmission order from PGCIL for 765 by 400 kV substation at Dausa for rupees 288.32 crores. Thus, our unexecuted order book as on date stands around rupees 4,361 crores. Other than this, we are L1 in orders worth rupees 3,550 crores, comprising of 1 transmission order from Power Grid for rupees 225 crores, 1 transmission order from Sterlite for rupees 200 crores, 1 transmission order from NTPC for rupees 227 crores, 2 smart meter orders, 1 from Jharkhand for rupees 1,395 crores for 12 lakh smart meters, and Jammu and Kashmir for rupees 1,041 crores for 7.25 lakh meters, and Tripura for rupees 445 crores for 4 lakh smart meters. We have bids in pipeline for over rupees 5,000 crores, which is yet to open, and we are hopeful to bag at least rupees 2,000 crores worth of orders out of the same. Coming to the outlook of various business verticals, as committed in last quarter, we have been able to tide over the difficult times and we foresee significant growth. We expect the growth momentum has just begun and should continue for FY24, 25 and 26. We expect larger businesses out of smart meter segment, transmission and data centers. The FGD segment is a bit subdued because of the energy issue country is facing at the moment. Probably this is the first year when energy demand is going to grow in double-digit growth, which in the last 3 years we have seen no more than 3 to 4% per year, or maybe stagnating. So Government of India has promised another thermal capacity of 30-40 gigawatts, but it will largely be brownfield and in PSU segments. We are also seeing strong power sector reforms as government desires to ensure timely payment to the generators, as well as wards to contain losses of the DISCOMs. Strongly, the amendment of the Electricity Act, December 22, is also in place, and now central government is trying to take a larger role out of the amendments, ensuring availability and reliability of power supply, as well as billing and last mile collection out of the sale of power. The overall financial health of the sector is likely to improve in the coming years if this focus really stands implemented. While the focus will continue to be on renewable power by addition of almost 500 gigawatt by 2030 as committed by Government of India. We will definitely need energy storage solutions like batteries, energy storage system or pump storage of no less than 20% of this capacity. And this will also have to be additionally supported by many kind of capacitive, reactive power management solutions in the grid, and we see significant activities where Techno is fully qualified and competent to provide solutions. Speaking on FGD segment, the FGD segment continues to be a bit subdued at the moment. However, a lot of work is still pending. Thermal capacity being largely in private sector, probably the owners believe that they may get more time up to 2030 in future. So they are definitely reviewing and waiting for commodity cycle to be subdued, further so that the solutions can be rolled back to sub 50 lakhs per megawatt, as was happening 4 years back. Our orders which we have got in Rajasthan is progressing smoothly. We have got orders worth rupees 1450 crores in FGD segment. This level of business will continue for next 5 to 7 years, as 100 gigawatt is yet to be ordered out by CPSUs, SEBs and private sector, totaling to a scope of almost rupees 1 lakh crore. In transmission segment, we would say after a long gap, the traction in transmission sector is back. TBCB bidding is happening for 50 to 100 gigawatt now, and a lot of bidding is in progress at the moment, and we are finding that every month 4 to 5 concessions are being awarded to power grid or the private sector. The interstate transmission system for evacuation and grid integration for 15 gigawatt renewable energy from Ladakh has been proposed with an investment of rupees 207 billion, including central support of rupees 83 billion. Total bids open for transmission is around 40,000 crores, out of which Techno expects to book orders worth 3,000 crores over next 3 to 5 years. We have won orders worth 610 crores in first quarter, and we are L1 in another 940 crores within the segment. Coming to metering segment or distribution. On the distribution side, we see a lot of activity happening going forward, particularly in the area of smart metering. Budget 2023 has also ushered in a key measure for the financial health of state distribution utilities by tying 0.5% of the deficit to power sector reforms. This is an added incentive for the states to reform the DISCOMs. We are witnessing focus on strengthening power distribution network to make them smarter and intelligent. The main aim of the government is to improve efficiency and contain losses so that the health of DISCOM could be improved. Around 22.22 crore meters are under various stages of awarding, totaling to around rupees 2.22 lakh crores, out of which around 88% would be under RDSS scheme. Out of the above, around 73.53 lakh smart meters, 9% of total awarded meters have already been installed. We expect to get orders worth rupees 2,000 to 2,500 crores out of this segment every year. We have already got one smart meter order in J&K for 2.5 lakh meter worth rupees 338 crores, and one smart meter order in Indore for 5 lakh meters worth rupees 536 crores under DBFOT model. And we are L1 in orders worth rupees 2,900 crores for 23 lakh meters. We are very hopeful that power sector is at very critical juncture and something good should happen going forward. Coming to data center, we all believe that digitization and services on cloud is the most prominent reason that has led to growth of data centers and demand of data centers apart from other reasons such as 5G and many more. Over the last 6 months, the industry has taken a very dynamic position, especially because of the way AI and machine learning has become more prompt and as becoming a way of life. So that has specially led to a change in the way data center infrastructure or design is conceived. As the world is moving towards adopting AI on day-to-day basis, the requirement of infrastructure to cater to those kind of computing requirements will also change, but lead to exponential growth in investments in data center. Given the kind of land bank we have compared to other countries in Asia Pacific region, and adding to it the renewable energy capacity that we have, plus the Digital Data Protection Bill that has been passed in the Parliament, the demand of data centers or the investment in data centers in India is going to increase significantly. And Techno is also in advanced stages of setting up a data center of 24 megawatt IT load of ultra-scalable, hyper-density nature. We have achieved significant progress on construction. We have completed the civil works for the data center building. We have already invested 222 crores on this project. Procurement of long lead equipment have been completed almost up to 80%, or one can say significantly. We are hopeful of commissioning the first phase of the project by March 2024. We are seeing significant and aggressive interest from strategic partners to enter into JV for developing data centers in India. We are evaluating the available options and shall conclude a way forward very soon. With capex of rupees 1,400 crores, that is 45 crores per megawatt, about 60 to 65% of this capex is invested in electromechanical work, which is an in-house expertise and strength of the company. And we will be able to leverage on the same for executing the work. With EPC capabilities and prior experience of developing infrastructure projects, we are uniquely placed because we have great control over cost, time, and quality of the project. With this, we are opening to answer your questions that you may have. So we look forward to receiving questions from you now. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Gunjan Kabra from Niveshaay. Please go ahead.
Congratulations, sir. Congratulations, sir, Ankit, and to the entire team for support.
Maybe the question to use your handset.
Is it better now?
Yes, ma'am. Please go ahead.
Yeah. Congratulations to the entire team for such superb set of numbers. I had few questions. First is, I wanted to understand if business-wise, where will be, in transmission segment, suppose in particular, how much can we execute in a year, assuming a project takes around 12 to 15 months? So how much, according to our manpower ecosystem and other bandwidth, how much of the total order book or how much of the total order can we execute in transmission and distribution in a year? I wanted to understand that.
Yeah, ma'am. You are through with your question or you have some more?
I have some more questions. Should I ask now or one by one?
Yeah, no issue, ma'am. By and large, we are have been strong in building transmission distribution solutions in the country. And at one time, we have done no less than 1,500 CR per year also. I think given the inflation factor and large value projects in one pocket, I trust we can even expand our ability to do around 2,000 CR a year. Does it take care of your question, ma'am?
Yeah. Also, if you can bifurcate, like in Q1 in transmission order book was around how much, if segment-wise, if you can bifurcate in the EPC segment, how much was executed from HGD and how much from transmission and distribution?
Yeah, you can take in Q1, Q2, almost 30% is from transmission. And another, you can say 20% or 18% maybe from the metering work and another 12% from data center.
Okay. And sir, if we close the order book in FY24 at around say 4,000, 5,000 crores, then what kind of revenue from that we can target in FY25?
Yeah, our target will be almost about 2,500 CR plus. And this year, as I have already said, we should be anywhere between 1,600 to 1,800 CR.
Okay. And last question.
Stabilize this execution at 400 to 500 CR per quarter.
Okay, that's great. And I also, this quarter resulted in higher EBITDA margin of the EPC segment. So was it because we incorporated some profitability from EMI business, which we used to do it on cost basis, or is it sustainable at 16% EBITDA margins in this business? 16%.
No, ma'am. You see, our guidance will continue to be 30% plus minus. And depending on commodity cycle, quarter on quarter, sometimes you see something better happening. And also the mix of the job in execution. If they are take-off stage, they are little more remunerative than closing phase projects. So it's all blended question. Commodities are at the moment a bit cool down. So that may have also helped. But the yearly guidance we will not like to change from 13%.
Okay. And last question is, in FGD, the demand scenario is subdued. So initially we were targeting around 1,000 crores every year in this segment. So now what are we targeting in this segment?
So we are always targeted around 500 to 750 CR only, because these are medium-sized construction projects, so it involves more efforts than compared to station work. But you can take it at the moment around 500 CR per year.
500 CR per year. Okay. Thank you so much, sir, and good luck to you and the team.
Thank you, ma'am.
Thank you. Ladies and gentlemen, please stay connected while we reconnect the management line, please. Thank you. Ladies and gentlemen, our next question is from the line of Subhadeep Mitra from Nuvama. Please go ahead.
Good afternoon, and thank you for the opportunity. Just wanted to reconcile some numbers that you spoke about in the opening comments. If I understand correctly, you mentioned that in transmission, we are looking at a potential annual order inflow of 3,000 crores. And for smart metering, you're looking at about 2,500 crores of annual order inflow. Is that correct, sir?
I don't think it may. I have talked of 2,000 crore as a capacity of transmission and distribution works, not the order book. Order book is a market-driven exercise. I trust we should be able to take a order intake of about 1,000 to 1,200 CR per year as far as transmission is concerned. And another 2,000 CR may be out of metering work.
So transmission, 1,200 crores per annum of annual order inflow, and smart metering, 2,000 crores. Is that correct, sir?
Yeah, on an average, but it will keep changing.
No. Of course. I appreciate that. And similarly, in FGD, what is the annual order inflow that you would be looking at?
FGD, we are having an order of about 1,500 CR already in hand. In this very year, we don't see any new orders happening.
Understood. But for FY25 and 26, given that there are a lot more orders on the anvil, is there any number that you would take that at?
You can take around 1,000 CR per year, sir, as the order book.
Understood. So on an overall basis, I think you should be comfortably able to be somewhere near the 5,000 CR mark if I put all of these three segments together.
Absolutely. It should be like that.
Perfect. And given that clearly the macros are so strong on the transmission and the smart metering side, and the way your order inflows and order book is growing, would you anticipate a higher growth in terms of top line, let's say over 25 and 26? You did mention, I think, 2,500 crores as the FY25 top line number. So can we, hazard a guess that maybe the number will be 3,000 crore plus, let's say by 26?
Yeah, you can safely take that, because 24 itself we should be around 1,600 to 1,800, and 25 our target will be less than 2,500. So 26, 3,000 seems feasible as per the order intake now.
Perfect, sir. Perfect. Very, very useful. And would you again be looking at naturally upping, let's say, the margin number, maybe not for 24, but going into 25 and 26? Would you see that, there is scope for the margin to expand further?
Look, it depends on the commodity cycle. So it is a bit speculative to my mind. The safer is to be around 13% plus minus. Definitely we would like to do better, but we would like to assure be part of 13% plus minus. We may change it after 6 months, maybe, but not now.
Understood, sir. Thank you so much for answering my questions.
Thank you. Our next question is from the line of Saisal Hawa from HG Hawa & Co. Please go ahead.
Sir, what is our ROC and ROE for this quarter? Second is, sir, how are we seeing the data center opportunity as a total? So do we see that as a good annuity income where we, set up the data center and, really give it on rent to the final holder of the data? And third is, how do we see the smart meters opportunity? Genus has also got a very large order. Is there any kind of tie-ups that we are looking at for smart meters which would get us this kind of orders? And even in data centers, sir, do we have any kind of tie-ups with any foreign majors to take advantage of the data localization policy of the government?
You see, let me answer your questions one by one. Particularly, coming to smart meters, we will not like to aim like Genus. We trust the sectors and DISCOMs have their own risk element, and we are almost a developer here in this segment, and projects are mostly of DBFO nature. Where funding has to be also made by the very concessionaire in this case. So our target is by and large, depending on whether scheme gets executed in country over 5-7 years or 10 years or 15 years, because generally in power sector we see the schemes are framed for 5 years, but execution carries on for 15 years. So if it is a scheme meant for 5-7 years, our target will be collectively no more than maybe 5-6 million meters. And if it happens over 10 years, then maybe 10 million meters. And if it is 15-year scheme, then we like to target 15 million meters. So our game plan will be no more than 1 million meter, 1 million to 1.5 million per year on an average as a target to execute these projects. Number one. Number two, we definitely are more excited about data centers. That's a very huge opportunity. It is in the building. Presently, it is more value accretive, but it will be revenue accretive post 26 more strongly. But some revenue flow should start from 24-25. With first facility, I'm happy to also inform we have also been allotted land in Kolkata now. In Silicon Valley, very next to all prominent players in this segment like Adani, Reliance and others, STT and Airtel. So we will be in a place to grow this segment post-26 more strongly. we see traction coming out of it. But within renewable power also we see more technologies becoming part of the solutions while integrating renewable into grid. More solutions on combustion reactive ability to be part of the grid, pumping storage to be part of the grid. So we see a lot of things evolving, We are transforming now and as well as growing, I'd say both. So you have to keep space for transformation and growth also, and new solutions within the space. So we are not, as you know, as a company, we have never tried to be the biggest. That is not the goalpost of Techno. We will always like to be the best as a performer and also better in terms of the margins, bottom lines.
Mr. Amar, does that answer your question?
Sir, about the ROC and ROE, what is the ROC and ROE that we are, and will data centers be like an annuity income for us, where we keep getting paid per monthly, and will the revenue come that way, or will we be like an EPC provider to the larger companies?
Sir, it can be a hybrid of both, depending on if we get an investor, the equity income goes to him. If we don't get an investor, it becomes my income. So question is, the long goal post of Techno is not to be annuity income earning entity and more of a business development entity in this segment. But in the past also in transmission assets or in the wind assets, we have lived with the equity income also on a regular basis. And we are fairly exposed to these businesses on PPP or PPF40 basis. So that is not an issue, sir. Depending on how asset is more demanding, we'll keep taking a call.
Sir, and you mentioned that we have 156 rupees per share of cash on books, or was it 156 crores? And do we have any kind of a plan to utilize this, so that our ROC and ROE really improve?
Yeah. You see, we have almost 140 rupee per share as a cash, and total cash in the books is about 1,500 CR as of today. And definitely this is meant to develop these assets like data centers, smart metering, and others, because we prefer to be debt-free company. And our target to one ROC will never be less than 15% on any of these resources in the company. Cash is, is a reality in any company, and we will always keep it productive. Cash also do not generate money only by investing it, but it creates value, accretive applications also. So we are very prudently utilizing the capital available with us.
But no chance of any buyback or a large dividend as such?
No, not in the present business, sir. There are so much of growth opportunities, so we don't want to spend money after buyback at the moment, but definitely we'll be larger dividend payout company, as we have done in the past. In the last 5 years, we have paid out no less than, for 4 years, almost 500 CR to the investors, both through dividend and buyback. The last dividend payout was almost 300%, and it may improve in going forward.
I really appreciate your answering my question so well, sir.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good afternoon, Gupta ji, and congratulations on a very good set of numbers. Good afternoon, Ankit also. Sir, one question was on this L1 of 3,550 crores. So by when do we expect this to convert into confirmed order for us?
Out of this 850 CR we have already got after September, and rest of the business we are hopeful to have it by maybe December, January should be there. But 850 CR we have already received in last 1 month, or 2 months, or 1.5 months. Sorry.
Out of this 3,500 crores, sir?
Yeah.
So now, what will be the, including this 850 crores, are we like at 5,100 crores of unexecuted order book?
No. The unexecuted order book, as told now, is about 3,600 CR. So if you include these 850, it becomes 4,300.
Okay.
As of September end, it was 3,600. And if you include these 850, it will be around 4,400 CR.
So L1 excluding this is around 2,700 crores.
Yeah, absolutely, you are right.
Okay, sir. And the other bid pipeline of this 5K crore, and we expect to get 2K crores out of this. So, what is the timelines for this, sir?
Sir, it is a role of, tendering. We do not have a control except to be a participant. Sometimes government utilities close these programs earlier than expected. Sometimes they take their own time. So it is so difficult to predict. But my takeaway is that we can easily expect an order intake of about 4,000 CR per year going forward.
Understood, sir. And sir, one question which I had earlier also was on our management bandwidth, because now I think we are growing by leaps and bounds. So any color or update you would want to provide in terms of what we are doing to sort of upgrade the organization also, sir, for the huge opportunities opening up?
Yeah, it is an ongoing process, in the company. And we take at the lowest level almost 40-50 trainees from good colleges of engineering, diploma holders, ICMAR in Pune, and many other good schools. And similarly, we are also laterally inducting the people wherever we lack some skills. So it's an ongoing process, I'll say. And our own in-house development programs are there. So training programs, exposure programs, we do send our people for training to institutes, to good trainers. We organize programs in-house also. So multiple techniques are being deployed to stay updated, competent, and relevant to the business.
Understood, sir. So finally, one more question was on the, if I look at the pipeline, we see a lot of orders from, these states like Tripura, J&K, some of the eastern states. So is there any geographical risk that you foresee from these sort of geographies? Because, these are not the regular ones. I mean, FGD, we have a big one from Rajasthan, but from the usual, larger states, we are getting slightly lesser business, and it seems to be more concentrated around these slightly more, I think, where the state governments are probably not in the best of the health, or the geographies which are slightly difficult.
I think it is an issue of perception. If you see rightly, the more of metering work and digitization in DISCOMs is required by those very states who are presently very inefficient, number one. So, more inefficient you are, more prone to performance they are by installing updated solutions. So, in a mature state, the chances of reward are always lesser than these kind of states where already the revenue collection is no more than 50-60%. If 50-60% revenue collection becomes 85-80% by virtue of installing any solution by us, they will never like to deprive you of or share the benefit with you as a minimal cost of per meter per month, or even any solution given to them on the software side. So I trust more inefficient you are, more prone you are to a better performance in these solutions. But for your information, We'll keep it properly blended, like last order of metering this month we have got is from the Discom of Indore in MP for 650 CR.
Understood, sir. Thank you, sir, and all the best, and very happy at the good performance.
Thank you. Our next question is from the line of Ashwini Sharma from ICICI Securities. Please go ahead.
Yeah, thank you for the opportunity, and congrats for a great set of numbers. So my first question is that you mentioned that you have already spent 220 crore in Chennai data centers. So similarly, over the next 2 to 3 years, how much, what is our capex plan, in these assets like data centers and smart metering and TBCB? How much can be outflow from our side?
Now, we can take, going forward, we should be investing more to CR in data center and another 1,000 CR in meter work.
So may I request you to come a little closer to the speakerphone while speaking?
Yeah.
Thank you, sir.
Could you hear me out, sir?
Yeah, that's fine now, sir.
What I was saying that 500 to 750 CR in data center for next 1 or 2 years and another 1,000 CR in meter work.
Anything on TBCB side?
Pardon?
Anything on the TBCB front?
TBCB today we are not very strongly focusing of our own. I will say we are only in EPC there with private developers or power grid, and we are happy with that business with them. So we won't be looking for any investment from our side.
Okay. What is the kind of return that we are targeting?
On what?
Let's say on smart metering and data centers.
Yeah, data center is a high-end solution, so obviously everybody expects more rewards. And smart meter is a little blended business, I will say. So compared to EPC, you will always expect little more return. It's a great solution, all are not alike in terms of the risk. So you have to blend them with the risk and reward ratios accordingly, either with technologies or with the financial risk you are taking in developing that asset.
So we haven't, started booking profits in the data center. Why? When we'll be able to start that?
When we are close to the revenue stream, sir. It is no good idea, to book profit or bill out costs when it is still in a development stage. So it is value accretive at the moment. So we will acknowledge in our books only when it becomes revenue accretive.
Okay. Sir, on the guidance, I think there has been revision. So just wanted your inputs segment-wise for FY24 and 25. If you could tell us, within the EPC, how much will be from transmission, how much will be from your distribution, and from FGD.
I think you please write to us. We'll give you the answers or visit us, no issue. Because this kind of business is not done with this kind of accuracy or preciseness on many opportunities. Some opportunities you build up for relationships, some you build up for rewards. But overall, our guidance will say that we should look for a beta of about 13% at a company level to the top line.
So I was more looking on the revenue guidance, sir.
Revenue guidance I have given already that this year it is 1,600 to 1,800 CR. Next year 2,500 CR. And the year after next will be 3,000 CR.
Okay, sir. Yep. Thank you very much.
Thank you. Next question is from the line of Vineet Anand from 3P Investments. Please go ahead.
Yeah. So, just trying to understand your business model for the data center. I mean, you are investing in it, and obviously when there will be somebody who leases it, you will get the earnings. What type of investment do you expect? 220 crore is what you had indicated that you have already put in. And will this be a next 3-5 year process, or how is it?
No. It does not go so long, sir. The phase 1 will be ready by March 24, and our capex will be about 550 CR in that by March. And
Of which
thereafter,
220 crore has been done.
Yeah, out of 550, 220, I don't know if commitment may be more, almost 280 CR, out of which 220 spent on this project. And rest will happen over next 4 or 5 months. To complete this project, this whole project is worth about 1200 CR. Which will be completed by almost around March 25 in all the phases of the project. This I am talking of phase 1. Then our Calcutta project will catch up. We are also planning a project in Hyderabad. So over the period down 3 years, you can say the data center capex will grow to almost 1,000 CR per year by third year.
So every year, starting maybe in the next 2-3 years, you will spend 1,000 crore on building data center across wherever,
right,
whichever region.
Or we'll be monetizing and reinvesting, or we may like to raise capital at the subsidiary level to fund these expansions, growth.
And while you did mention, it's a high-end stuff and, returns will be better, but any qualitative broader number, what type of returns you're expecting on 1,000 crore investment that you will be making?
Year on year, it may range anywhere between 15 to 20% as IRR.
And in the smart metering, you talked about 1,000 crore investment. What exactly will be our, spending on that, sir?
No, the spending will be 1,000 CR. That's what I said, because these are all DBFOT model, where government gives you a grant of no more than 15%, and rest 80% you have to invest from your own capital, which is paid out on per month, per meter basis over 94 installments. That is the scheme of the government.
Okay. And so, if I have to take the example of, say, Indore smart meter project that you got for 500, 600, so that the revenue that you will get, initial investment might be anything, revenue will spread over 94 or whatever 100 months, right?
Right. 94 months for each meter.
Yeah. So, and for that, let's assume 600 crore project, how much you will have to invest?
You take it, you see, these are a bit complex, If you write to us, we can explain more because it has a tax element of 18%. It has a finance cost of almost 20%. So all those elements, once taken off, the core capex may be no more than 70% in it, or maybe 65%.
Okay. Thank you, sir. I will probably, reach out to understand.
Yeah, you're welcome.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Next question is from the line of Keshav Garg from Counter Cyclical PMS. Please go ahead.
So firstly, I wanted to understand that out of our total receivables of around 670 crores, sir, how much are due from Tamil Nadu State Electricity Board being wind power receivables?
It is about 125 CR.
Okay, sir. And sir, apart from that, we have recovered all the dues, etc., from the State Electricity Board?
Yeah, absolutely.
Okay.
And out of 125 CR also, they are part of LPS scheme now, which are paid out in a installment, which is already being paid out for last 15 months, month on month, as a committed payment through RECPFC. This is a scheme of the government to liquidate them over 4 years.
Sure,
out of which about 1.5 years has already been over.
Sure, sir. And sir, also, sir, till FY21, I remember you used to be very confident that we will do at least 15% operating margin on the EPC side. Sir, after that, the commodity prices went up post-COVID, and now again they have come down. Sir, but then why? And sir, now the order inflow has also increased. So, considering that, sir, one should have expected that margins might go up from 15%, but you are still giving guidance of 15% only, sir. So that's a bit strange.
No, there is no strange in it. You must understand. Firstly, the tariff post-21 itself has seen a decline of 20% to the very developers, number one. Number two, all commodities have not cooled down in last 2 years. Still the electronics like semiconductor-based solutions, whether it is PLCC or CRP or your SAS or DCS, they are almost double the price of what we used to get before 21. So some commodities like steel, copper have better. Transformer prices are all-time high. Nobody wants to manufacture CRGO in the world now. Everybody wants CRNO to make batteries, storage batteries, vehicle batteries. So these pressures on costs as well as on pricing will always be there in a competitive market.
Sir, but now that, sir, for the new orders, when we bid for new orders, so we must be bidding keeping in mind whatever the cost of the latest prices are of the various inputs. So even on new orders, once our old orders get executed, sir, then can we expect our margins to revert back to 15%?
Maybe if commodity cycle sports, availability of electronic sports, you please understand India is transforming now. We are opting more and more for renewable power. And these solutions are meant for evacuation of renewable power and integration into our main grid. Similarly, the whole world is now transforming into renewable power. A lot of programs are happening in US, Europe, and other countries also. So demand of all these high-end elements of transmission is very high at the moment in the market. And suppliers are hardly few. Presently, it is all supplier-led market. So we are compressed between the ability of developer to afford versus the supplier expectation of prices on their timely supplies. So no cycle is always free to EPC. You know, EPC is always a bit of a challenging business, and you need ability to make money in this market.
Sure, sir. And sir, lastly, sir, if we look at our cash flow statement consolidated, sir, then for the 6 months of this financial year, sir, our operating profit is down from around 123 crore last year to 95 crore this year. So now I understand that on consolidated basis, we don't include the data center EPC work that we are doing. Sir, but the point is that apart from that data center work that we are doing, in the rest of the EPC business, sir, why is the operating profit for the first half less than last year?
So you are comparing non-comparable, sir. The 123 includes business discontinued. That is wind business. Okay. You please remove it.
Sure, sure.
Then you will see that the margin has doubled over last year. See our segment results.
Sure, sir. Sure, sir. Point well taken, sir. Thank you very much and best of luck.
Thank you. The next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Sir, thank you for the opportunity. My question is on the data center side of it. Just to understand, you did say that it would be a revenue would be a mix of depending on if we have an investor or not. If I can understand, what would be like per megawatt, rent that we will receive per month, if we rent it out. Well, we would have some number in hand, right?
Yeah, generally these data centers are rented out on or leased out on per month, per kVA basis as an application, and rates are generally ranging depending on the type of consumer you have, whether it is enterprise or it is hyperscaler, and what sort of capacity is taking from you, or is a co-location customer. So it can range anywhere, from $80 to $110, depending on the type of consumer.
This is per kVA, right?
Yeah, per kVA.
Okay. Because one of our competitors who is in this business did give you even...
No, please, these are rentals only. There is no power cost inbuilt in it. Power is extra. That is at actuals.
Right. Yeah. So I'm talking on the rental side only. One of our, competitors gave a number of somewhere around 90 lakhs per megawatt per month as a rental. So I just wanted to know if our number matches on megawatt side somewhat nearby to what they are quoting.
No. These are not... you can calculate. I've never calculated like that, so I cannot authenticate them. But maybe closer to what we are talking.
Right. Got it. Sir, just one more question. What is our cost of setting up 1 megawatt of data center?
About $5 million, sir.
Okay. And this is $5 million assuming greenfield, right?
Yeah, greenfield, absolutely. It's always greenfield only. Presently, all data centers are happening as greenfield.
Yeah, greenfield as in, I meant this includes the land cost entirely, right? I mean,
Yeah, everything, land to ready to use.
Yeah, right. Okay, right. Thank you, sir. That's all from my side, and all the best.
Sometimes it may depend on location. If you go to Bombay, it may be 6 million because land is pricey there. When you go to Chennai or Kolkata, it may be 5 million. So land price is a big surprise,
True. That is.
In Calcutta, Chennai, we get land still for $1 million per acre. In Bombay, you may have to shell out no less than 4 million maybe per acre.
Right. Got it, sir. Thank you, sir.
Thank you. Ladies and gentlemen, that was the last question of our question and answer session. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
From the current quarter, I will only like to say that from the current quarter on, we can expect a top line of 400 crore plus quarter on quarter in future. As I mentioned in my year beginning statement, I will say the sunrise has happened for the sector and has just happened. And going forward, there seems to be good programs in place in at least for next 3-4 years. And also it is the first year when we are seeing energy growth or consumption growth in double digit as against 2-3% in the last 4-5 years. So all good is happening in the energy sector, power sector. All companies are moving, whether it is generator or it is EPC or it is transmitter or it is distributor. All are being rewarded by this growth, and I wish India travel this journey. It is first time I am happy to share with you the grid load have touched 250 gigawatt, which used to be no more than 170, 180 gigawatt just a year back. on an average. So I would like to thank you, all of you, for joining the conference with us. In case you still have any query related to our performance, please drop a mail to us, and or you visit this side of India, please drop in our office, and we'll be happy to receive you and take you around the way we work. And with this, I would like to close the conference and thank everybody for joining and wish a very happy Diwali, very happy festive season for all of you. Thank you very much.
Thank you. On behalf of Asian Market Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.